need to just know a couple of basic patterns. Like, for example, does the market tend to like to visit the same price area twice, maybe three times before it makes a move? Yeah, like double tops, double bottoms. I like to call them two touches or three touches. Yeah, the market does seem to like to do that. The problem with ICT, I think, is it's just overcomplicated. And guys, trading is really as simple as if you can catch a nice move, you're going to make money. If you limit your downside and you unlimit your upside, meaning if you use stop losses, but you're able to hold on for those big winners when the market really makes a large move, you're going to make money. It's really as simple as that, guys. Trading is not as complicated as ICT makes it. It's not as complicated as your YouTube gurus are making it. It's really as simple as, can you limit your risk? Are you willing to take losses? Right? Are you willing to repeatedly take losses on the hopes that one of your trades is going to be a big winner? Are you willing to have a 20% strike rate? Are you willing to have a 30% strike rate? Guys, you can make money trading with a strike rate that is below 30%. Okay, do the math on that. You're stopped out four times, but the one time that you have a winner, it's a big runner. And that's what you have to do. In my opinion, from my experience, from trading for a while now, trying a lot of different systems, guys, ICT is not the only system that I've tried. I read, I'm a very academic guy, so I'm very bookish. I love reading. I've always been sort of an academic type. And so I got into trading thinking that this would be the same thing as going to school. And it's not. It's really not. It's a different skill set. Guys, this game is all mental. Right. So what do I mean by that? It's so this is a book that I just picked up. It's called The Best Loser Wins by Tom Hugard, and I like Tom's work on trading psychology a lot. There's other good books on trading psychology. You don't know where the market's going, guys. Let me just be honest with you. You don't know where the market's going, but over time you will sort of visually get familiar with certain things. Like you'll watch the market, and as it's forming, with more and more experience, you'll get a better idea of where the market probably is going, but you're not always going to be right, which is why you have to use a stop loss. I'm not fully on board with the idea that the market is completely random either. So just because I'm saying that, guys, ICT's notion that there's some magic algorithm driving the market is just okay. I'm just going to say it's not true. It's not true. There's no magic algorithm, guys. There's high frequency trading algorithms. Now that's for certain. But those high frequency trading algorithms are just trying to make hundreds and hundreds, thousands of trades, and they're trying to capture very small moves, and they provide market liquidity. Right? They're not, the high frequency trading algorithms are not trying to trade like a human would. A human being is going to hold on to a lot of trades for a long time. Whereas high-frequency trading algorithms are in and out of the market at a level that human beings really cannot. You can't compete with a high-frequency trading algorithm. You just can't. So you don't want to compete in my opinion, you shouldn't be trying to compete with high-frequency trading algorithms because it's not possible. ICT makes trading too complicated. Guys, this is all up here. Trading is all mental. It's all mental, guys. It's 90% mental, 10% technical. You will learn over time that the market generally likes to visit the same sort of price levels multiple times. Okay? You will learn that generally the market moves the most in the pre-market, except for when there are earnings seasons or if there's an FOMC event. So one thing, again, I want to give ICT some credit. ICT says you need to watch your economic calendar, and I cannot agree with that more. You need to watch your economic calendar. You need to know when your FOMC minutes are. You cannot trade futures purely on the chart and not be aware of when there are earnings or when there's a Fed interest rate decision, or if we have a new consumer price index or inflation print. You need to know when those things are happening, because that's when you expect the market's going to make a larger than average move. And so ICT is right about that. Now, all of ICT's different patterns, the order blocks, fair value gaps, breaker blocks, do they work? Well, sometimes Sometimes they do. I've seen some of ICT's concepts, like sometimes it does. It's just it's too amorphous. It's not definite enough, and it overcomplicates things. Guys, you could really, and I hate saying this, you could almost day trade at random. So just take a buy or sell at random. And if you were good enough at just placing your stop losses and letting your winners run further than your losses, you would make money. And that's just trading at random. Recently, guys, the market has been virtually just going straight up. If I get on the daily chart, and so, frankly, guys, for the most part, for the past couple months, if you're just holding a position long, you've made money. Now, that's our current market position. That's our current market sentiment. That doesn't mean that the market's going to continue just going straight up forever. In fact,